Hey everyone, welcome. Good to see you guys. Hope you had a good day. I know it was a little exciting, probably not what you were looking for or counting on this Friday. I know I certainly wasn't ready for it. I was expecting a nice quiet morning. We did have a nice quiet morning, but then it got really exciting really fast, didn't it? We were actually, I was commenting to Roger that, hey, this, it's turning out to be a pretty boring morning. And within minutes, I eat those words. So let's see how everything played out. Hopefully, you weren't hurt too badly in all of it. Hi, James. Good to see you. Hi, Cosmic Spiral. And we'll see how many people we get. Generally, on days like this, people are looking for a lot more for guidance, and so they get a little nervous. They come into the live rooms a lot more. But of course, with the post-market show, who knows? Maybe they're done with it and ready for the weekend. So my puts definitely paid off. Good, good, excellent. I was kind of preparing for it because of the USHY and SPY divergence. Good, good, excellent. Good to see you, Elise. Okay, so obviously that's a huge red bar right there. Hi, Peter. Do margin calls move markets? Margin calls will force the liquidation of positions, and so they can exacerbate moves downwards. Yeah, so they can move markets. Yeah, it just depends on the value, like how many shorts there were, or or um, or how many positions get offsides. It can happen on longs too, but generally it's shorts that get into themselves into a position where they get margin called. So let's see. Oh, the market. So it started out quiet. It was so nothing, right? Look at it. It's so just pure chopping sideways, and then right about 8 o'clock, 8 o'clock my time, so 11 Eastern. That's when we started to get that tariff news. Trump getting upset with China, saying he's going to jack up tariffs and starting this whole trade war fears again. And then we got the initial sell off. Then we looked like we were going to stabilize and recover. But then towards that, I thought this was it. Actually, I was in my weekend trading club live with them, and we were during this half hour right here. I said we probably saw the bottom of it. The market has had its opportunity to react, and it should be priced in by now, but I was wrong about that. I thought towards the end of the day we would trade upwards, and we traded downwards towards the end of the day. So people definitely not liking that and taking risk off the table, selling things off hard and going downwards. So there's a few questions that we need to answer. Some of them were asked during the weekend trading club. Of course, not all of you had access to that, so we'll go over a lot of that again over here. So the first thing that we need to do is just whenever something like this happens, it is a potential shakeup in our entire view. So I have to go back to the fundamentals and I have to go through everything very, very carefully to reevaluate, because a lot of my assumptions on the trades that we have on, those could be broken now, and it could invalidate a whole bunch of trades. Just like when I told you guys about on COVID, that initial day of COVID, it invalidated every single one of my long theories or my long assumptions. So that meant that I had to close all of my longs. So does this constitute it? Well, the good news is that we're still above that MA50. So maybe not, but I still need to go through and evaluate everything. Are we cooked? That's a good question. This is what we're going to attempt to answer through this process. I see correction this, correction that. Uh, we'll see. We'll see. Just hi, Kirk. Good to see you. Okay. So first thing I'm going to do is not even look at the equity markets. I'm going to go back to the very fundamentals, very basics, and I'm going to go to bonds first. Bonds and rates. So we did have a gap up and continuation move higher. So bonds were okay. Bonds look like this, and money moved into it. So now I need to ask myself, is this because of interest rates or is it because of a flight to safety? And on a day like today, it is more likely to be a flight to safety, but I still want to look and make sure that nothing really changed in terms of rates. The easiest and quickest way for me to do that is to take a look at the FedWatch tool and just see what's. Hi, Mary, good to see you, and TP, good to see you too. So over here, I want to know, did anything change in our expectations of rate cuts in the next couple of months? So I'm just going to make sure this is accurate, and the answer is no. We were at like 95% before, now we're at 96.7. Basically, we've completely priced in that there's going to be a rate cut in October, a couple weeks from now. How about December? Now we really think that there's going to be a rate cut in December. So those are, it went from 81 to 92.2. That should be bullish. It should be propping up the equities markets. Okay, so we expect rate cuts. Rate cuts should drive the bond market higher. So it is partially explained by, because an 81 to 92% move, that's not insignificant. Okay, so that is, okay, so some of that move up in the bonds is due to rate cut expectations. Some of it is probably a little bit of flight to safety. And so net, I would say that this is probably net still supportive and bullish of the overall markets. So the TLT is telling me it's not time to panic yet. Does the bond market being closed on Monday impact the stock market after a day like today? It will impact it on Monday for sure, because now it won't have any clues on what's going on in the bond market. So we can expect, it's not quite like a holiday in the market, but we can expect probably heightened volatility because of it inside of the markets on Monday. Okay. Hey, John. Stats shows 88% of the time after a 1% down move on SPY, we see a green day the following day. I don't know, someone said it in a forum. Stats are dangerous because if you just take a stat, it doesn't have any context. And we don't know what happens on those other days. I would say, hey, does the rest of the context even matter? Or if we pull a pure statistic, sometimes it doesn't, and sometimes it does. So we need to be very, very careful when we see stats like that. We need to say, hey, okay, it might be a good number, it might be something that's useful, but I need to examine and evaluate. Okay, so what if I say after a 1% down move on SPY, the next day is an up move? Well, this was let's see, let's see if I can find a 1% down move. Okay. So this was a 1% down move, and yes, it moved up the next day. Let's see if I can find another 1%. This is a 1% down move. It was flat the next day, down the following day. Okay. I don't know if it's going to be 88% of the time, but the context is going to matter a lot here. If you're saying that a 1% move from a high, an all-time high, versus a 1% move that broke below the MA200, or broke an important moving average, or a 1% move on a downtrend, okay, 1% move here's a 1% move right here, where that was true, and a 1% move where that was not true. And then another 1% move or greater than 1% move right here, where we're both basically just flat. Then another 1% move where it just kept going down, right? So if I'm in a downtrend, that thing is going to be completely false, okay? So we want to be very, very, very careful with those stats. And we're going to examine right here what I should be looking at and whether or not I should positively expect a bounce next week or on Monday. So first off, we looked at the bonds already. I'm going to look at the dollar, and we say, okay, the dollar sort of didn't like it, but sort of it didn't have a huge reaction. We didn't see the same huge reaction that we saw in stocks. Actually, what we got was an inside day on the dollar. It didn't break that low. It didn't even break the open, and it didn't break the high, or it didn't even break the close. So this was a complete inside day on the dollar. So the dollar didn't really react too much. So far, what I'm seeing in the bonds and in the dollars is encouraging. It's not like, oh my God, the world's falling apart. So now I could look at commodities and things like that, but I'm just going to skip to Bitcoin. Okay, Bitcoin did not like that. So obviously Bitcoin is still moving more like a large cap rather than as a flight to safety or haven or really an independent asset like a lot of people claim it is supposed to be. And then we have our, well, Sean, whether or not you close your protective puts or VIX longs or anything like that depends on the context of your portfolio. And it depends on everything else that happened in your portfolio. So it's not necessarily a bad thing. Can you explain what happened? Yeah, give me just a moment. It's really not that much of a mystery, actually, what happened. And let me finish Bitcoin, gold, and then we'll go into what happened. Okay, gold bounced and recovered from that, but it didn't go screaming higher. So there wasn't a huge reaction. Like if you told me nothing happened in the stock market and you showed me this picture, I'd be like, yeah, this is in line with what we would expect most of the time for the price action to happen. So we didn't see a huge reaction in dollar. We didn't see a huge reaction in gold. Bitcoin just moved like a large cap stock, and TLT moved up, but the expectations of rate cut also moved higher. So that net is supportive of the equities market. So far, everything's looking okay. Everything's looking good. Let's go to the SPY. And we did already talk about this a little bit for bro, where over here, everything was hunky-dory, just chopping along, normal, quiet Friday morning. And then the bottom fell out, and that was because of Trump. He started tweeting and he started announcing that he was going to he's going to increase tariffs on China's rare earths because they made some move to tax or tax the world on rare earths also, or to port ships, to dock ships in their ports and things like this. So basically, they're having this giant, pissing contest over tariffs. Okay, and who knows? There's the political and the motivation behind it. The fact is that the world thinks there's going to be more tariffs on rare earth minerals. Rare earth minerals are an important part of AI, of batteries, EV, electric vehicles. They're an important part of a lot of, like, basically the most important sectors in the markets right now. And so the markets didn't like that at all. Okay, and then it can continue to sell off. That's all that's happening. What I expect to happen, if it's just that, okay, what happens after every single piece of news? What happened to XLV? Oh, we're not going to tariff. Bam. Okay. Liberation Day. Oh, just kidding. Okay, 90-day pause over and over again. Okay, bam. Instant recovery. Okay, so far, I'm not too concerned about this. Am I expecting an instant recovery on Monday? I don't know. I don't know the exact timing of it. I don't know when or if Trump is going to be like, oh, well, just kidding. I'm going to meet with Xi Jinping next week after all, or 2 weeks from now after all. I'm not canceling it. Who knows? He swings back and forth all the time. So I can't say. If it's just on that news alone, if the news gets reversed, or once the market prices it in and stops caring about it, just like it stopped caring about tariffs way back, like who talks about tariffs anymore? It was the only thing anyone talked about for a couple of months. And a few months after that, the market just kept going higher and just not caring about the tariffs really anymore. Remember when TikTok was a big deal? Oh my God, they're going to shut down TikTok in the US. It was the only thing anyone could ever talk about. And then Trump said, no, we're going to delay and delay and delay and delay and delay and delay until now we're still delaying. Okay. And no one cares about it anymore. So pretty soon, the most likely path is we're not going to care about it anymore somewhat soon, and that this will recover. The counter argument to that is if something important breaks, if we break important levels, then that could potentially erase. If it starts to snowball into more and more areas, then that is an argument for that breaking. Okay. But so far, what we've talked about before, if you heard my commentary and if you heard other guys at the pub talk about, I don't know what everyone says, but I know what I've been talking about. And that was when we pulled back here to the EMA 20, I said, let's wait and see if we want to bounce, because we are a little far from the MA 50 and we should be getting a pullback to the MA 50 relatively soon. And actually on Monday, Chris Pulver and I, we were in our Gamma Report show, the newly started Gamma Report show, and we were talking about how a pullback to the MA 50 was appropriate at this time. And today, it came pretty close to the MA 50. So far, nothing is too surprising yet. I don't have a reason to be particularly pessimistic yet, based on everything that I've seen so far. I'm not drawing the conclusion yet. I'm just saying that so far, the picture that we've gone through so far is not terrible. Okay, let's see what you guys are saying. Let's see. I was concerned that high yield corporate bonds started selling off last week, but the market didn't reflect it till today. Okay. That would be a pretty long delay for it to reflect in the equities markets, but yeah, it's possible. Trump tweeted, he didn't tweet Biden. Okay, great. Let's see. Okay. Remember Al Brooks saying, when you see really strong move, just trade like a dumb. Context, yeah, context. It's all about context, right? There is a rumor that Xi Jinping had a stroke. I have no idea. I didn't see it. I have no idea. I have zero information about that. Layoffs of the government shutdown, that could exacerbate that, but that is longer term. You're not going to see that reflected in any economic data for at least a few quarters, right? It's not going to be something that the market immediately reacts to. It is something that's going to be a slow pressure on the markets. You won't see that in a single day's trading action. What is the MA50? Can't read my graphs. Okay, this green line is the MA50. That's the MA50 right there. Okay, so my lines are done in rainbow order. Roy G. Biv, so red is MA200, 150, 90, 50. Blue is the EMA 20, and purple or violet is the EMA 8. Okay. So we are very close to that MA50. So that is heartening. Earlier today, when people were asking me, I said, I don't know that this sell-off is over yet because we're not yet at the MA50, but where I have stronger support. Okay, so far, everything is looking pretty good. We're pretty close to that MA50 now, enough that I would say, hey, a bounce from here would not be unprecedented. And so far, at the moment, everything that we've seen, I'm not expecting that we'll necessarily break the MA50. Now, the one piece of data that I am now seeing right now on the chart that might give me pause is this VIX right here. VIX is at 2166, and that is, okay, anything over 20, we got to be careful because now we're in a different volatility regime and we've got to trade differently than we normally do. So this is a high volatility regime. That means we're going to have prices move up and down. That means options are going to be expensive. So we have to be aware of, we're not just going to buy options, whether they're puts or calls. Why? Because they're expensive, and two, they could bounce around a lot. The counter argument to that is you can get into some really fast and really good day trades because of that volatility moving so fast, those prices moving so fast. You can hit a target really quickly and really easily, or really short, like a 7-day swing trade might turn into a 2-day swing trade because your targets are hit so quickly. On the flip side, your stop losses could get hit super quickly too, and you'll get stopped out for no reason, and it'll just turn right around. So normally during high volatility regimes, we want to remove those stop losses. Otherwise, you're just going to be paying through the nose. Every single one of your positions is going to get stopped out. Okay, so we want to be aware of that. If we look at VIX, what we see is that spike up today. We ended near the highs. We went above this spike right here. This spike right here only lasted a day or two. Okay, it came down almost immediately. Same with this one right here, didn't quite get to 20. What we want to know, and we can't know until next week, is if we're going to stick around here for a few days. Okay, so this was mid-June. This was May. This huge up, this was Liberation Day. Okay, so we're nowhere near Liberation Day. We don't have to be worried about that. But you can see over here, we stayed for a few weeks before Liberation Day from February. So if we take a look at February, May, June, February, May, and June on the SPY, we can take a look. February was this down move. May was this flat area. June was this flat area. Okay, so other than February, we're not really talking anything too bad here. Okay, February was this. Okay, and went all the way up to 30, and it just kept going higher. But if all we get is this kind of little peak above, a few days above, and then come back down, it doesn't really go too much higher than 20, 21, 22, then we're okay. Then that bullish trend can resume. Then basically what would it mean is that we chop sideways for a little bit. Okay. So again, VIX is concerning, but it's not breaking my bullishness yet. Okay. So far, what I'm seeing is this S&P is pulling back to the MA50. The medium-term trend, and what I always teach you guys in the post-market review or post-market live stream is I am using this MA50 as my longer-term trend, and I'm using the EMA8 as my shorter-term trend. My longer-term trend is intact. It is not being threatened right now. I mean, it's getting close. Okay, it's challenging it. It's about to challenge that MA50, but there's no, at this moment in time, with the story that we developed until right now, there is no reason for me to believe that the chances of that MA50 being breached and staying breached is high. So far, everything is looking okay. There's no real concern about it. Of course, if it happens next week, then the story changes. Then we flip. Okay, but what this does mean, though, is that we've been talking about our portfolio scorecard here, and that how I've been a 2 until this moment. And what I told you guys was that if it pulled back to the EMA 20 and it confirmed a bounce, then I would go 3. It didn't do that. it went straight through the EMA 20. In fact, that EMA 20 provided zero support at all. It just went straight through, and then it actually acted as baby resistance, and then we just kept going down. Okay, so that EMA 20, it didn't do anything. It didn't prove to be any sort of support this time around, and we went straight towards the MA 50. Okay? So that gives me a little bit less comfort, but what it does tell me though is like I shouldn't be thinking that I'm a 2 anymore, and I definitely shouldn't be a 3. What I want to be now is a 1. Okay, getting close to the point where I might actually be a 0. Okay, so I'm a 1. Maybe if we breach that MA 50, I'm going to go to 0. Okay, so that's what this means to me so far. So let's take a look at a few other things. If this holds, what would allow it to hold? And what types of strategies do I need to look at? So one thing that we have a big advantage of is that we have access to some really good gamma data. And we have, or at least I have, access to the GEX trading terminal. Okay. And so if I go over here and I look at this SPY, make sure I'm on all expirations. Let me refresh this. And again, so we do have some expirations for today, so that the gamma picture will be slightly different on Monday. But what I want to know is, are we overall in a negative or positive volatility, or not volatility, gamma regime? And before today, we were in a positive gamma regime. And today, it definitely took us down into a negative gamma regime. So we're at negative 7.717 billion, whereas a couple days ago, we were at like positive 2 billion. So we went really negative today on the gamma. On gamma, if we are in the positive gamma region, then I want to buy pullbacks, buy the dip. Okay? So what this is telling me is that we are no longer in the buy the dip territory. Until I see this bounce back up and go positive, I'm not thinking buy the dip. What I'm thinking is wait for a bounce, wait for a confirmation. Okay, so what I want to see is a confirmation. Either we don't have to touch the MA 50, we could trade through the MA 50, but I want it to recover. I want it to close back above the MA 50. I want a green bar, and I want to have a decent green bar. My normal criteria for a confirmation is close above the previous day high. I can't really positively expect that on Monday, right? It's going to be very hard for us to go all the way back up and close above this high on Monday. That would indicate a really, really, really strong move, and probably complete reversal of what Trump said. So maybe like this, okay? That could happen. But even on this day, you see it didn't happen. And here we got another down day, and here it did happen. This is rare. We almost never see this. Okay? It's really, really hard. Okay? If we look over here, okay, so it sort of, that did it, but that wasn't a huge red bar. So I can't use my normal confirmation criteria for Monday. So if I get a sizable green bar, that'll make me comfortable. It's even a stretch to expect that it could close above the EMA 20 on a single bar. Okay, so as long as I get that green bar and it covers half or most of the way to that EMA 20, I'll be pretty happy. I won't be so happy that I'll be like, oh, I'm completely confirmed. But then if we get it within 2 or 3 bars where we're above the EMA 20 and the EMA 8, then I'll be happy. I'll consider that a confirmation. Okay. Let's see what you guys are saying. Yes, my candles are daily. That's correct. Yeah, I mean, so far, everything that I'm seeing is optimistic for a bounce. No guarantees, okay? But optimistic for a bounce so far. Okay. There you guys are commenting a lot today. Okay, let's see. SPY dropped another 600. Post market, I wouldn't worry about post market, especially over the weekend. Oh, don't worry about that. Yeah, there's no reason to panic just yet. Everything is looking okay. Do we really care about? No, we don't care about post-market movement. Okay. Okay. All right. So, you're scared. Okay. Yeah. Yeah. But you're calming down. That's good. Okay. Okay. So far, everything is looking okay. Everything's looking normal. I am still bullish. I'm not as bullish as I was earlier, obviously, but I'm still bullish. There's no reason for me to flip bear or even to neutral just yet. If we do break that MA50, then yes, I will flip to neutral. I won't be bearish just yet, but that would constitute a change, to neutral. Okay. So let's also look at some gamma levels. Okay, we looked at the overall GEX number, but we didn't look at the actual levels. And kind of so messy just because of the action that we had today. Well, we got negative gamma levels at 650. Below that, we have 645, 640, and 630. That, I wouldn't care too much about that. So we do have support over here at 645, and we could hit 650 very easily. Okay, you see this max pain number. Max pain number is a number that does naturally get gravitated towards, especially towards expirations. So that max pain should act as a magnet upwards as well, 662 area. Okay. So nothing, again, not anything super, super pessimistic. Okay. We did see quite a bit of volume at this 660 level. I don't have a good graphical representation. I have data tables where 660, there was a lot of, let me see. I know how to show you. Okay. What price did it spend the majority of the time at today? Come on, where's my box? Okay, it spent most of the time in this area. Okay. So if we do a daily or intraday volume profile, you'll see the major spike right here. Okay, so that's centered around 660. So that's going to be a very important level all next week, but mostly on Monday, depending on what the price action that happens on Monday. But most likely Monday, especially with bonds not open, we'll probably get some volatility. 660 is going to be an important level. Okay. All right. So far, what we've concluded is that still bullish overall on the market, not time to panic. Okay. If you built a long short portfolio the way that I've unfortunately didn't have enough time to fully get you into, but to share with you, then this did not represent a huge blow to your portfolio. Okay. If you had a whole slew of longs and almost no shorts, then you probably got hurt pretty badly today. But if you stuck to the long short portfolio construction, no more than 10 positions, no more than 5 longs or 5 shorts at a time, and you stuck to the number 2 as your sentiment for bullishness, meaning that you basically you only had 2 long positions open, or you had 3 long positions and 1 short, or 4 long positions and 2 shorts, or 5 long positions and 3 shorts, then you did just fine today. You're okay. I mean, you probably got hurt, but it probably just a little slap on the wrist. Okay, it wouldn't have hurt you that much. So let's see what you guys are asking. If you change levels of bear bull, do you close positions or add offsetting ones for the portfolio? Either one. Okay, so I just went from 2 to 1. And now, well, because I didn't finish building that portfolio, it happens to be at a 1 right now. So I'm actually okay. But what I would do is I would close one of my bulls, the ones I like the least, either the one that's closest to its stop loss or the one that is closest to its profit target. Okay, I close that one most likely. And then I'd be okay. Or I could, if I liked all my longs and none of them were near my stop loss or my profit target, then I could look for a short that I liked, assuming that I can find a short that I like in the market. If I can't find a short that I like in the market, then my only choice is to close one of my longs. Okay, so that's how we get your portfolio back to the score that you've given it. Does anyone know what Trump's announcement in the coming minutes is about? Oh, I don't know. I'm talking to you guys, so obviously I don't know. I didn't even know he was going to have an announcement soon. Do the China and Euro markets lead the US markets on Monday? To a certain extent. The US markets is generally the leader. So usually overseas markets, Europe, China, Japan, any other market takes its cues from the US market and not the other way around. And yes, it does work the other way around, but to a much, much more limited extent. So depending on what the caveat is on Mondays, yes, any news that hits over the weekend does get absorbed first by the foreign markets. And so you could see a leading event based on that. Okay. November longs are probably still safe. Yes, most likely. Yes. At least for now, based on what we're seeing. Yeah. Okay. All right. So now that we've got a handle on our state and our opinion, so basically what we're saying is nothing so radically and fundamentally changed that I need to close all my longs. Right? Unlike what happened with COVID, right? With COVID, everything is great. We gap down below the MA50. So that already violates because it takes me from bullish to neutral. So I really shouldn't have many or any bullish positions just because of that. But also because of the nature of the news and the uncertainty of the news, that was a really good reason to close all my longs. Okay, so every single trade idea got invalidated with that one move. And what we're saying here is that we're not in the same boat today. This is not a COVID-like event. It's not a COVID scale news. It's not even close. It's just Trump having a little hissy fit about China increasing their tariffs or fees or whatever it is. And so this is what we have, and we're still above the MA50. So as of this moment, there's no reason for me to lose my bullishness completely. So we just moved down to a 1, slightly bullish. Okay. October longs could, I don't know, just depends on how far down you got hit. Okay. Kane, since you have multiple trades for a ticker running in parallel in your programs, can you list the specific trade in the news in the one click and the future. Frieder or John, I'm not sure which one's your first name. I think it's Frieder. I I believe most of the time I do that, but I'll check on it. I have zero control over one click. Like the process, I'm not the person who inputs things into one click. I have no idea what it looks like or how it gets, how that whole thing gets processed. So the format that I send out doesn't not necessarily a format that you receive on your end, but I can do what I can. I'll do what I can. Yeah. Okay. RSP is on the MA90. Yeah, RSP did break its MA50 and it's on its MA90. That's correct. Okay, but there is support here. So we want to see. We want to see if that support breaks. Okay, and what that indicates is that there's probably a good number of stocks that went below their MA50 now. We can check the momentum on that. Okay. A Trump tweet doesn't equal COVID. That's right. Okay. Okay. Excuses, guru excuse. The one-click thing. I call it an excuse if you want to, but I don't have access to it. I don't have access even to my own programs, so I don't. The gains that the SPY made over the last 2 months were wiped out in a few hours. Yeah, that's generally how markets work, right? Slow on the way up, fast on the way down. But I wouldn't say the last few months. It's just this. Maybe I'm wrong. I might be about to prove myself wrong, but it's this right here. That's the gain that got erased. So this is September 11th. So about a month. Okay, 1 month of gains. Yeah, 1 month of gains. Okay. Amazing that we have great gains that just tank in one session. That's why we like the better than 1-to-1 reward risk ratios, right? 1.5, 2-to-1 reward risk ratios. It helps us. Of course, if there's a flash crash or overnight gap down or something like that, then you don't have that, right? You don't necessarily have that guaranteed protection of a 2-to-1 reward risk ratio trade, but it should come pretty close. Like today, you had opportunity. Even though it did happen fairly quickly, if you had your stops and your alerts in place, this initial move, you should have been able to get out by this. This is 20 minutes right here. It should have been enough time. Unless you have a job, you can't pay attention and things like that. Right? In which case your alerts or you would have to set your stops based on the underlying and not on the option if you're trading options. BMNR? I mean, yeah. I mean, it just pulled down. It hit the 65 target, but if we missed exiting on that day, I didn't alert it because I gave everyone the target and it was on the Q4 summit and I forgot to put it in my notes that I should alert everyone. But this could easily come back to 65. I wouldn't, yeah. I don't think it would get worse than the initial dip or the dip after. A lot on sale today. So remember, we are not in a buy to dip environment anymore. Okay, so we need to recognize the regime and the environment that we're in. We pierced through that EMA 20 like it didn't even exist. Okay, it went, see, that bar just sliced right through it. It did not pause or stop at the EMA 20. It just went straight through it like butter. So that did not hold at all. I don't know for sure if the same thing would or would not happen to the MA50. based on everything that we've talked about so far today, I don't believe the same thing would happen to the MA50. But what if I'm wrong? What if Trump throws out another mean tweet about all of Europe on Monday, right? Then maybe it will slice right through that MA50 as well. So, but based on what we know so far, it is more unlikely that that will happen to the MA50. It's more likely that the MA50 will hold. So we are not in the buy the dip environment anymore, as was indicated by the gamma exposure I showed you on the GEX trading terminal. We have that negative exposure. We are not in a buy the dip environment anymore. So if you do want to buy a dip, you've got to do it on something that has confirmed. Okay? You do not want to buy on a red bar right now. You don't want to jump the gun. You absolutely want confirmations if you buy a pullback right now. And so one way to do that, I actually went through exactly this in my weekend trading club. We did this together. Close is greater than close yesterday. Close is greater than the high yesterday. Close is above the MA200, above the MA50, and I'm looking specifically at S&P 500 stocks, because those are the ones that the ones that will get institutional money and backing. Those are the ones that will come up first. Okay, the small cap stocks and things like that, they're going to move a lot less predictably, so the edge isn't there. They could completely defy the market and just go do whatever it wants to do, because that's retail driven. All the tools that you learn here with me, they're institutional tools. They may or may not apply to a small cap stock. But here, I know for sure they apply to the larger cap stocks, to S&P 500 in particular. And so I'm looking precisely at S&P 500. And then we can bleed out to other large cap stocks, medium cap stocks. But the heart in the beginning is going to be the S&P 500. So I'm going to run that scan again because it should be there. The only 17 stocks in the S&P 500 fit this criteria. And then what we notice is they're all defensive. A couple finance here and there. So staples, utilities, medical, all super defensive. So what we've got to ask ourselves is, do we actually want to be, if we're actually in a bullish environment, do I want to be in a defensive sector? Maybe yes, maybe no, right? But it's a question I have to answer for myself. So if I go over here, and then we'll take a quick look at finance, okay, XLF. Yeah, it's kind of neutral, right? We're neutral on XLF. So the finance, but CBOE and CME, the two finance stocks that came up, is that something I want to be bullish on right now? It just crossed back above the MA50. In this environment, maybe, because that's not a pullback. That's more of a breakout above the MA50, maybe, okay? And then what was it, CME? Yeah, CME. Same thing, okay, except it's stuck at the MA90. Okay, so I'd favor CBOE over CME, but I wouldn't be itching to get into this. And what I told you guys earlier, a few days ago, or right before we started, or right during when we started the long short portfolio, I told you that if I have a small account, if I have an account smaller than $10 million, I want to be a hell yes on every single one of my positions. I want to be super excited to get into them. I can't wait to put my money in this. I can't wait to tell everyone to put their money into this. I wish my account was 10 times bigger than it was so I could put 10 times as much money into it. I want to be that excited about it. And right now in this environment and the way that CME looks or CBOE looks, I wouldn't be like, oh, hell yes, let's do this. So I'd hold off. Okay. So XLU, utilities. Okay, a little overextended, but we could find potentially some good opportunities right here. XLV, healthcare. Same thing. Not actually, not. So it broke above the MA200, and then now it's pulling back to retest it. I could get optimistic about XLV. I prefer if it was closer to the EMA8 or the MA200, but maybe the individual stocks will be there. So I'm okay with it. And then the other one we had was Staples. And I do not want to be in Staples at all. Not even close. If anything, this is a break below this green line right here. That was a sideways channel. And it might come back and retest it. But so far, all it's done is consolidate below, gap down and consolidate. What's the resolution of a consolidation? Generally, it's in the direction of whatever was moving in before. And it was moving down, gap down. So Staples not ready yet, okay? So the only ones I might be interested in would be the utilities and the medical. So there's fewer medical. We can look at those real fast. CVS, Core, DGX, and McKesson. What were we looking at yesterday? What did I want to put in the portfolio yesterday? My top pick, the one I ended up trying to do, but failing because the options weren't liquid enough. It was McKesson. Okay. And so this is what I mean. Yesterday, we looked at McKesson. I said, I like this. It is a short-term reversion to the long-term. Okay, that I said it's not super strong on the long term, but it was okay, and it was okay enough. And so look at this. We've got the longer-term uptrend, and then we have the shorter-term switch directions to match the longer term. So I said yesterday I'd be happy to go into this. And it's confirmed. This green bar has a high higher than that, or has a close higher than that high. And look how it did today. It did just fine. It's up 0.74%. Because the options were not liquid enough, we went into work. And what happened here? I said this was an anticipatory trade because this was not a confirmation bar. It looks like it's bouncing off the EMA8. It looks like it. We don't have the short-term to long-term reversion, so this is more just a bounce off of the EMA8 play, or bounce out, break through the MA200 and bounce back above it play, but it did not confirm. We have a green bar. It closed below the high of the previous day, and look how it held up today. It didn't do too bad, but it's not the same as McKesson. It is down. It's down 1.73%. It's down not quite as much as the overall market. Okay? So that's why we do confirmations. There's a difference between the confirmations. So in this environment where you're at negative GEX territory, where you're no longer in the buy the dip territory, you absolutely want to make sure that you look at something that confirms. Okay? So this would have been a better opportunity this morning, but not terrible. It might be okay still as an entry. It's still an okay entry. It's not too far from the EMA8. Then we had COR. So COR is too far from the EMA8. Okay, so I wouldn't be going into that. And then we had CVS. How did this fit? How did this get through the scanner? It's supposed to be close above open. Oh, I didn't put that. Close greater than open. Okay, that's the only one it eliminated. That's pretty funny. Okay, so CVS, not a candidate for me. Okay, so if I want to go into utilities, I've got a few of them that I could look at. Okay, Duke, AWK, ED. No, that's not, that already went. It's more break out at MA50, pull back, and then bounce off of it. This is a confirmation bar, but it's not a really strong trend yet. This has been chopping sideways. That's it. Okay, that MA50 is very flat. So I'm not super excited about this, so I wouldn't go long. Remember, I want to be very excited about it if I'm doing a long short portfolio on $10 million or less. And so not Duke, oops, not Duke, not AWK. Well, I could just do charts right here. ED, no, same thing, that's breakout. And not a really strong trend yet. CMS, maybe. SO, too strong, a little too deviated. EXC, too deviated. COR is now back to medical. So let's take a look at, oh, DGX. Was that there before? We'll look at DGX and CMS. DGX is a short-term reverting to long-term. I'm like, in terms of liking DGX, I'm at about an 8 or 9. Not quite at a 10. So that's why I'm hesitating here, because it's good. I like it. I'm just not sure if I like it enough to pull the trigger on it. It's so close, so close. I do like it. October 21st. Yeah, we are currently in a high volatility regime, and we're 11 days before earnings. And then we're going to lose 3 days over the weekend, 2 days, 3 days over the weekend. Yeah, so basically, if I hesitate this long, then the answer is a no for me, even though I like it. It's close. It's super close. Super close. Okay, and then what was the last one? CMS. Gamma levels are dynamic. They change moment to moment. Yeah, most gurus right now are giving you long alerts because up until today, it was very bullish. And today, we're still, at least for me, I'm still slightly bullish. Right, so I'm going to give you more longs than shorts. I didn't issue a single short until this week. I issued a couple of shorts, but it's been at least a couple months since I've issued a short in any of my services. Now, that's not surprising at all. When I say 10 million, you wonder why you're here, because I'm teaching you how to run a long short portfolio on less than 10 million. I'm not teaching you how to manage 10 plus $1 million. I'm not teaching you how to run a $1 billion portfolio or $1 trillion fund, right? Which I've done in the past. I'm teaching you how to trade $10 million or less portfolios. And what I'm telling you is that the way that you trade a $1 million or $2 million portfolio, $10 million, less sub $10 million portfolio, is the same attitude and the same approach that you trade a $5,000 portfolio, which is why I am showing you guys currently, I'm in the process of showing you building out a $5,000 portfolio. We just haven't gotten very far with it yet. Okay, that's why you're here, I hope. If not, if you're not getting any value out of it, then I don't know why you're here. Let's see. Yeah, I need to be real excited, love all our positions, yeah. Why did your GEX levels in SPY and SPX change so drastically? That means they're dynamic and not stable. Yeah. How dynamic and stable were prices today? They weren't. How dynamic and stable was your opinion of the market today? It wasn't. Same with the market makers, same with the other market participants, same with all the calls and puts being bought and sold. Right? The gamma levels are going to absolutely change. My entire opinion of the bullishness of the market even changed. How stable was the EMA 8 today? It wasn't. How stable was the EMA 20? It wasn't. MA 50 was. Very few things were stable today. And if we're looking at gamma, 0 DTE, nothing 0 DTE was stable today. Okay, so gamma levels, yes, they are dynamic. If they weren't, then they wouldn't be that useful, right? They have to go with what is the current market conditions. So the gamma levels will move. If people buy and sell a whole bunch of 0 DTE options, which you've got to imagine they did with this, then the gamma is going to move. Yeah, absolutely. Yeah. Let's see. Dean, on that trade, so basically you just had to be vigilant and watch the market and set alerts, okay? And so what I always do is I always model any trade that I'm in. And at any given moment in time, say, okay, in the next half hour or just say in the next hour, okay? So I'll move this out to an hour and say, what levels do I need to pay attention to? What's my break-even point? What's my minus 10% level? What's my minus 15% level? What's my minus 20% level? What's my minus 25% level? What's my plus 5%, my 10%? Okay, and depending on how concerned I am about what's going on in the market, I will have more levels that I'm marking. Okay, and then I set alerts. So I'll read the price and I'll set alerts. That's how I manage it. Closed 14 to 10 positions in the last 3 days. Happy? Good, excellent. I'm glad to hear that. Glad you're safely on the sidelines. Let's see. Roger Scott mentioned in his VIP room that a delta neutral strategy, could that be a management strategy, or when it became evident there's no, okay, delta neutral is on the portfolio level. And generally, unless you are a very, very large fund manager, you do not want to be delta neutral. Delta neutral means flat. Okay, delta neutral means 0. Okay, 0, neutral. Okay, which means that, I have positions that go up, I have positions go down, and net I'm flat. Delta-wise, my expectation for a $1 move in the market is that I'm not going to make anything or lose anything. So if it goes $1 up or $1 down, I'm not going to make anything. That's delta neutral. If it goes $2, $3, $4, $5 up, then delta the delta on one side doesn't catch up with the other, and so then I do start to make or lose money. Okay, that's delta neutral. So are you going to run a delta neutral on a long short portfolio for sub $10 million? Absolutely not, unless the market is neutral. Okay, so the goal of a long short portfolio on $10 million or less should be, I want to outperform the S&P 500. If that is not your goal, then you should just buy the S&P 500. Okay, just go long SPY stock. Don't even bother with options. Don't bother with anything. Just buy SPY. The whole point of us going into options is to get leverage so that we could potentially outperform. And the only way to at least match the S&P 500 is to go delta positive. If the SPY is going up, and I have delta positive portfolio, then my portfolio is going up. For each $1 move up in the SPY, my portfolio is going up whatever my delta is. Okay, if my delta is 1, then I'm matching the SPY. If my delta is 0, I'm not making any money while the S&P is going up. So I don't want to be delta neutral in that case. If the SP up goes up $1 and I'm at a 50 delta, then my portfolio is going up 50 times the SPY, making $50, which might be a little too volatile because if it goes down $1, then I'm losing $50. Right? So it just depends on what you're trying to achieve here. And that's why we have these scorings. And I want to have my positions appropriate for how bullish or bearish I am about the S&P 500. Okay, so that's what delta neutral means. You're not going to make any money going delta neutral unless you're selling options. And if you're selling options, you're still not delta neutral. I mean, iron condors, basically. If you do a whole bunch of iron condors, you will be almost completely delta neutral. And you'll make money as markets chop. They go directional, though, you're going to lose a bunch of money. Right? You're going to break either up or down below one of your targets, below one of your max gain zones, and then you're going to lose money. Okay, so being delta neutral in a trending market is you're going to lose money. Okay, so you want to be delta neutral, or you want to be neutral when the market is flat. You want to be long, you want to be bullish when the market is up, and you want to be bearish when the market is down. Okay, let's see. You guys have so many comments. I'm trying to catch up. I know I'm a little over time, but I do want to finish catching up to your comments. I would never hold. I never deviate from my plan. If I am holding a calendar or a diagonal, and I'm at the day of expiration, okay? If I'm holding this and I'm at the day of expiration, I will not close that short and keep the long. I will not let this short expire and keep the long, because when I put on the trade, I did zero risk analysis beyond this expiration. Zero. This chart shows me nothing about after this expires. Okay, so I'm taking on risk. I'm taking on a huge amount of risk and complete unknown if I do that. So unless you are capable of doing the calculations and actually do the calculations, I wouldn't do it at all. It's a giant gamble fest, and probably with a lot more risk than you're aware of and that you're counting on. So the way that this would work is basically 3 questions. If you're thinking about taking this one off and keeping this one, my question to you would be, at this moment in time, would you buy a put in the markets with the S&P 500 very close to support, with all of the analysis that we did so far that suggested that that support would probably hold and that we could expect at least a baby bounce on Monday? Would you buy a put? Hopefully your answer is no. But if your answer is yes, then you move on to the next question. And the next question is, would you buy that put? Would you buy the 680 expiring on October 17th? Would you buy that put? Or would you pick a different put? If the answer isn't that, I would absolutely, as my top choice, pick the 680 put expiring 10/17th, then guess what? You shouldn't be putting on that trade. You should just close this and put on the put that you want. And if this happens to be the put that you wanted to put on, okay, you say, Kane, no, I would put on exactly this put. This would be my number one choice for it. then I am going to ask you, would you put on the number of contracts that you currently hold? Oh, did you have a 1 lot on this trade, or did you have a 10 lot on this trade? Did you have a 5 lot on a trade? If you had a 5 lot, would you buy 5 of these puts? 5 long puts at a price of $2,589 each. Would you be putting that much risk on the line? Right? Because you didn't have this to offset to bring down your cost, right? Would you be putting over 25, $26,000, $27,000 on buying these puts? So if the answer isn't yes to all 3 of those, then you are taking on oversized risk and you're not doing the math or the calculations. You're gambling with a huge amount of money that you didn't expect to gamble with. And all we can say is hope and pray that it's going to work out for you. Okay? And I don't work on hope and prayer. I work on math and probabilities and edges. So I wouldn't do it. But of course, you have to make your own decision. Okay. What you just described is why I'm here daily. Oh, good. I don't know when you made that comment, but good. I'm glad. Thank you. Kane just slapped us silly. I'm laughing. I thought those were 2 levels of support. Actually, not sure what we were talking about there, but okay. Repeat when to buy based on close, etc. Repeat when to buy based on close. Was I talking about buying based on a close? I think the closest thing that I might be getting that I might have said is buy on a confirmation, only if it confirms. In which case I'm buying on a green bar that closes above the previous day high. Yeah, don't try to delta neutral a small portfolio. It doesn't make sense. If you wanted to go, okay. If you wanted to go neutral on your portfolio, just sell off, if you're long, if you're bullish, then sell off a couple of your bullish positions or buy a couple of short positions to offset it. That's the easiest way to think about it in your short portfolio. Delta neutral, if you're delta neutral, you're only trying to make money off of time decay as a retail trader. If you're a market maker is always trying to be delta neutral. Okay? They're making money off of bid-ask spread or collecting premium, which is what you would be doing if you were a delta neutral retail trader. You'd be selling premium, like I said. You'd just be a premium seller. But you'd have to sell premium in a way where you're balanced and delta neutral, which basically means iron condors for a retail trader, or covered calls and covered puts in both directions. Okay, so I don't think that's most people. There's no delta neutral for a small retail trader. You're neutral now, or is this specific to delta questions? I am slight bull right now. I am slight bull. Okay, slight bull. SPY historically has been far better than cash or CDs over time. Yes. Stocks only beat valuation if starting valuations are low. So stocks only beat inflation if starting valuations are low. Yeah, if you buy and hold over a long period of time and you're in the correct stocks, then yes, stocks only beat inflation if you're in at the right valuation. That's correct. Value investing, basically, Warren Buffett style. GEX levels thought they were support and resistance magnets. They can be, yes. In most contexts, yes, they are support and resistance levels, yeah. VIX destroys VIX high volatility destroys technical analysis. Let me just put it that way. I've said it many times before, but it's probably something that's easy to just pass by and ignore. Okay, it's very critical though. High volatility destroys your analysis. Right now, if VIX was 60 right now, I wouldn't care that we're sitting above the MA50. It could whip right through it and right back, or right through it, and stay down. If VIX was at 60 or 100, it could rip right through that MA200. No problem. Just like with COVID. Okay, back in 2020, that VIX went through the roof. And it didn't matter that we were above the EMA 8 or the EMA 20 or the MA 50. Okay, it went through it like butter. Okay, VIX stayed elevated. It went through the MA 200 like butter. It did not care at all. Okay? It didn't care about your RSIs. It didn't care about your MACDs. It didn't care about your Bollinger Bands. It didn't care about your ATRs. It didn't care that this was probably like a 5 ATR move. Okay, so let me. 2020. Okay. So it's definitely more than a 3 ATR move. It's a 4 or 5 ATR move. Okay. It doesn't care. If you're in a high volatility regime, the rules are different and you cannot trade the same way. Okay. So now that we're volatility above 20, the rules are different than your normal trading. We're not above 20 that often. That's why you guys keep trying to apply the wrong rules to where we are right now. Most of the time, we are below 20. Okay. And post-COVID, a lot of the time we were even below 15. Different set of rules. Below 15, 15 to 20, 20 to 30, completely different rules. 30 and above, watch out. Okay, that's not, you probably don't even want to play. You just want to sit on your hands unless you know exactly what you're doing. Okay, just like this, unless you knew exactly what you're doing, you probably got your face ripped off during the Liberation Day snafu. Okay, so yeah, don't try to apply your normal rules now that there's a reason why the background here is red. Okay, before it was green. If like a couple days ago, or I put on the replay. Okay, green. Okay, there's a reason why visually I have a reminder to myself that, hey, look, we're playing by a different set of rules now. Okay, today what it's saying is play by a different set of rules, unless it comes right back down on Monday, which is possible. But if it stays up here, we're playing by a different set of rules. One that you probably haven't been taught. And there's probably no reason really to teach you or spend a lot of time teaching you about it, because we don't spend a lot of time. But like it's going to be like 10% of the time you're in the markets, and you could just sit on your hands during those times. Okay. Sorry, that was incomplete. Change options trading to selling options versus buying. VIX needs to be below 20. Yeah, the rules that you know of on how to trade will apply to VIX below 20. And even below, even in the low volatility regime. Depending on, we change differently. We go for nice long trending stocks below 15. And then here, 15 to 20, a lot of pullbacks and things like this. Okay. All right, guys, we talked about a lot. We went way over time. Hopefully you guys learned a lot and you got a clearer picture so you don't have to be emotionally reactive to what's going on inside the markets right now. If you have any questions over the weekend, just shoot me an email, kane@investpub.com. I'll be more than happy to answer either directly in an email or via the post-market review. If it is going to take more than a few sentences or a paragraph to explain something, then I'll do it in a video format, because usually it means that there has to be visuals and things like this to give a proper explanation. Okay. Have a wonderful weekend. Don't worry about the markets. The markets will be here on Monday, and we'll see. We'll get to see exactly how well this holds up. Okay. All right. Enjoy yourselves, and I will see you guys on Monday. All right. Bye, everyone. All right.